Hello, ladies and gentlemen. Sanford Kahn here, business author, speaker. The title of this YouTube video is Investing for Peace of Mind, a Safety First Approach. This is not a get rich type of investment type video. There's plenty of those on the YouTube and other places too. It's for the safety of your capital. So what am I talking about? Well, preliminary, I forgot to mention something. If you get something from this video that you feel is worth your time and effort, please subscribe to my channel. I appreciate it very much. And also leave a message. I do read the messages. Anyways, what am I talking about? I'm not talking about stocks. You're not going to have peace of mind with stocks. Stock market is highly volatile. You're not going to have it with Bitcoin. Bitcoin is doing well, but what goes up like a rocket could come down like a rocket, plummet to earth like a rocket. I'm not talking about gold. Gold is a commodity. Like any commodity, they go up, they also come down. So what am I talking about? I'm talking about pure, unadulterated safety. Not get rich, but pure safety of your capital. And I'm talking about short-term, very short-term U.S. government obligations, namely Treasury bills. I invest quite a bit into Treasury bills because I think the stock market's in a massive bubble, but that's my opinion. Well, how do you buy Treasury bills? You could buy them through your brokerage account, or you could buy them on Treasury Direct, or you could buy them directly from a bank. But the beauty of Treasury bills, let me give you an example. Let's use $10,000, okay? It's a nice round number, even number, a lot of zeros there. So if you take $10,000 and you go to a bank and put it into a CD, you get your interest every 6 months. Even if you put it into a bond, a corporate bond or government bond, you get your interest every 6 months. Excuse me. Treasury bills work different. They're different. They are discounted up front by a discount rate. In other words, let me go with the example of the $10,000. Let's say you put $10,000, and I'm talking about very short-term Treasury bills. I use 2-month, but let's just go 3-month T-bills because I looked up what the rate of return on 3-month T-bills. So let's say you want to buy a 3-month T-bill, and you use $10,000. Nice even number. So you think you put $10,000 in? No, you don't put $10,000 in. You could. The government will not take $10,000 out of your account. They discount it by a discount rate. The current discount rate would mean approximately they would take approximately $9,900 out of your account. You get the $100 interest up front. That's the only one. Treasury notes, bonds, you get them every 6 months. Treasury bills work this way. You get your interest up front, and then after 3 months, they pay you $10,000. You see, this boosts your return. The return on 3-month T-bills, I just looked it up, is 4.33%. Now listen to this, state income tax-free. State income tax-free, not federal. I wish it was, but boy, that would be beautiful. But it's state income tax-free. So if you're in a high-tax state like California, New York, New Jersey, Illinois, and then there's several others, it boosts your return. If you're in a state that has no state income tax, it's 4.33%. You could sleep at night. You will not get rich, but you're also getting a rate of return that's bigger than inflation. So you're coming out ahead. So this is how you sleep at night and have a safety first approach in your investments. This is your foundation. Treasury bills in your account is your foundation. Then from there, you could go and take more risk with your investments. But once you have a solid foundation, psychologically, that improves your state of mind. That even if you make an investment, a speculative investment, and it doesn't do well, at least you have your foundation. And your foundation should be in T-bills. So that's the investing for peace of mind is short-term U.S. government obligation T-bills, about 3-month T-bills. The longest you should go out, in my opinion, is 6-month T-bills. I, myself, go 2-month T-bills. I just like 2-month T-bills. Every 2 months, I roll them over and I collect my interest. Anyways, I think I got my point across. Appreciate it. If you could subscribe to my channel and also leave a message. I shall see you again. Remember, a secure future lies in economic growth. I want you to be safe in your capital. Build a strong foundation. Okay? Bye now.